Hello everyone, welcome to Market Insights. I am Dilusha Gamage. Investing in the stock market might be something normal for some of you, and for some of you it might be something scary, and maybe some of you are just lost and looking for some directions. Market Insights is to give you and help you to make informed decisions about your investments. Well, to do that and to give us the best market insights, the best person is Imtiaz Buhardeen. Hello Imtiaz.
Hi, how are you, Dilusha?
Welcome to Market Insights.
Thank you.
We are glad to have you here today. And Imtiaz, to start off, let me ask you, first of all, what made you to be an investor and invest in the stock market for such a long period of time, even though there were so many volatilities? What made you do that?
I had a liking towards the stock market from my young days. From 1980s, I used to follow the foreign markets and all those things. And since then, I wanted to slowly start from at some point. So around 1985, I got a chance and I started investing on my personal level. And like that, now over 35 years, I have that experience now. I've been continuously I've been in the market. For a short period, I think about 8-9 years, I went overseas to Singapore. In that period, I was not actively involved, but I was involved in other markets in Singapore and in American markets. So overall, yes, for 35 years, I have that experience continuously trading. But yeah, the question you're asking is Sri Lanka, why during the bad times also. For me, what I felt was, after especially coming back from Singapore in 2011, I missed the 2009 and the bull run. So immediately after that, after I came back, I wanted to build up a portfolio. So my only goal was just to keep building, and I was never looking at profits. So last 7, 8, 9 years, I've been just whatever monies that I was making abroad, I kept on building into this portfolio. And after this problem, the COVID came in and the market started going up after the close down. I was in a good position because I already built up quite a big portfolio. So yeah, although we didn't make money for last 8-9 years, but this helped me to recoup all my losses or whatever I lost and made more money than before.
We are talking about 35 years of investment experience. If you take the past 10 years, let's say the companies, the listed entities, over the period of time, they have grown.
The last 10 years, I would say I think 2009-10, we had that bull run. And thereafter, there were lots of accusations also coming about this pump and dump. All those stories were coming. So people got scared a bit during those periods. So I would say 11, 12, 13, these stories will keep on going. So it took some time for people to realize what's happening in the market. Maybe a few cases would have happened that whatever that accusations, but up to now, most of those I don't think so very much has been they had some investigations or whatever, but nothing is properly finalized. So then thereafter again, maybe when the Apalana government came also, I think the interest rates went up. That was bad for the stock market. The taxes also went up. So again, that 4-5 years period was also not a good period. And maybe after now this government came, the interest rates have been brought down drastically, which used to be 14-15%, has come down to about 6-7% now, the borrowings. So it has become attractive. The taxations have all come down. So it looks like again it's a market friendly for the stock market at this moment. So the valuations, as I said, yeah, the companies made reasonable profits, but it won't be extraordinary. Consistently they kept on making money, but that didn't reflect in the market due to liquidity problems, and people are not aware about the stock market much. And as I said, the earlier issue, a lot of people went out of the market. All those things happened. But since of late, you can see there's lots of people have come back into the market, and the turnover levels have gone up, the confidence level has gone up, and even the recent profits also, the companies are making very good profits due to the import restrictions and taxation reduced and the the interest rates coming down. So overall, it's good at the moment. Looking good for the market.
Let's say it's looking good for the market, but current situation, if we look at it with the pandemic, the whole world is facing this issue that we have never faced before. And also, there's no difference for Sri Lanka as well. And as a result of pandemic, we are seeing that our currency depreciation, and also there's a lot of pressure in our foreign currency reserves. This aggressive depreciation of the rupee, is it going to affect the market too negatively?
For the listed companies, I don't see it won't be a big of a negative because most of our companies, we are more export related and tourism and such. So import, the depreciation is good for the market, I would say, for the companies. The companies are making better profits. Mainly the import bills are like for the oil imports, the gas, the machineries and certain things. Those are the main like car imports, which are not much into the stock market, those are related. So if you see the companies that are listed in the stock exchange, they are benefiting out of the depreciations. So manufacturing, exporting, all those things have a positive impact. And also the foreigners also always have been looking at a proper depreciation of the currency for them to re-enter the market. So now the rupee has gone around 200 rupees. I think it might be a good time for the foreigners to come back again because of the depreciation. But I don't think so depreciation is going to keep continuing like this. Government will take certain controls. I think when the debt situations, I think they're getting the loans and they're repaying. We have never had a default. So there are unnecessary negative thoughts are put in saying that we might default and all those things. But I don't think so. We are never, in our history, we have never defaulted. And I believe that going forward also we will be able to get over that situation. I think also even the rating agencies also giving negative time to time. But now even like the World Bank has given a positive thing for this year, our economy should grow better. So overall, I still have a positive thought for the market, except the tourism industry at the moment we are facing because of the COVID situation. But once that also settles, it also should be a benefit for the listed companies. But other than that, most of the companies I don't see that are affected. Even you take a garment industry or anything, it's still there are imports, but there's more value added on it. So you take your tea exports to your manufacturing to most of the other actually it's a benefit for the listed, but overall maybe for the economy or this thing there can be certain negatives like the cost of living going up and kinds of things. But as the question for your listed companies, I don't think so it won't be a negative because lots of companies have even gone overseas also. So their incomes also are coming when they translate it, they are getting a better returns. Even the banks, I think when there's like a depreciation like this, there's a big gap. When they make lots of money when there's a big spread in the currency. So overall, I think listed companies should enjoy this.
But as you correctly touched upon, Imtiaz, foreign investors, they have been the elusive category in the past few years. They have been the net sellers. And not only that, they are trying to stay away from the market as a whole. In the Colombo Stock Exchange, can we still survive and thrive without the foreign investor category, or do we need them to come back?
No, definitely we need for the foreign investors to come back. As you rightly said, the last 2 years foreigners have been net sellers. Last year we had about over 60 billion rupees gone out. This I think about 52 billion, and this year another already about 20 billion has gone out, the net foreign outflow. Few reasons are there. One is, again, as I said, they had this fear about this default, the country default, and the rating agencies putting us down. That's one. The second thing was after the COVID situation, there were a lot of redemptions in their funds. So it's not only related to Sri Lanka, the whole region, I think there were not a lot of foreign selling was taking place. So if you see in the short term, yes, they have sold, but I'm sure that they will get back once the currency also settles down. They can see the market, the liquidity has gone up. Earlier our liquidity also was not there in the market. So slowly, gradually that is happening. You can see more listed companies are coming. So most of the numbers are looking great. So I'm sure the foreigners are going to come back in a much bigger way than before. So very soon we might write off all the outflow which went out. We'll get into positive maybe another 6 months or 1 year's time.
Do we have to wait till the currency to depreciate even further for foreigners to come back?
I don't think so. Even for foreigners, for big funds, the government has given a guaranteed, I think at whatever the rate they bring in, for next 3 years if they keep the money, that can be taken back at the same rate. So even the big funds, there is no risk actually in that. But the smaller funds, maybe they waited for the depreciation. But if they wait too long, I think they're going to lose out more than the depreciation in the capital gains in the market. If you see within the last 1 year, our index was about 4,200, 4,300 last year May. Now it went up to about 9,000. Now we are around again 7,200, 7,300 levels. So if you see about 100 to 200% easily, lots of stocks have gone up. So I think they lost out a lot. So hopefully, I think before it's too late, they're going to come back and realize.
That means we don't have to wait too long for them to come back, and that will be another positive
definitely
image to the market.
Yeah, so that the locals have carried through without the foreigners. Whatever they have absorbed all that, because they know the valuation is good and they have the trust and the belief in the companies and the economy here. So I feel for a while, another 5-6 months, we can go through without a problem. But definitely they will come at a premium, they'll have to pay and come back into the market soon.
Imtiaz, let me ask you this question. Now, one of the recent issues have been that infamous broker-related, the credit-related circular issued by Stock Exchange in early January 2021. And effectively now, this has wiped off more than 800 billion market cap, I would say. And what do you think about that? And do you think that Stock Exchange and SEC would have managed this situation in a better way, or what they could have done differently?
It's a tricky question to answer. Yes, I think they could have managed in a better way. If you see, I think the SEC has the right to ask whatever information from the stockbrokers, but I don't know the protocol whether that has to go through the CSC, because again, when I spoke to few of the stockbrokers, what they were complaining was, first thing was the letter that they sent with details asking for, with the names of those certain companies, how much they have bought, how much they have financed, and what is outstanding, blah blah, all those details. So that they didn't like it. So maybe it's like information that they were giving to some of their members, like thing, some stock exchanges with few of the stock brokers represented there. So that's one reason I think they were a bit reluctant giving those information. Maybe if it had come directly from SEC, it would have been better and it would have been more confidential. But here, once this letter also was leaked out to the social media, so that panicked. A lot of people had issues. Even the newcomers who came in, they felt like this information is like maybe they're trying to take and give to the Indian revenue, or is it something more stricter, something that they're trying to take action or something like that. But it's a routine thing, but the way it was managed was wrong. That sent a ripple effect down the market, and when the market was doing really well and touching almost 9,000 points by around end of January, unfortunately this letter came and put a dampener on the whole market, and the turnover levels were very good, like about 8-9 million average daily. I think month of January alone we had almost 187 billion turnover, which was almost 40-50% of the previous year's turnover. So it was nicely building up, a lot of people having confidence and coming, and yes, this brought down, and now it has taken almost 3 months and we are almost 1,600, 1,700 points still lower than January. So it's taking time to come out of that situation. I hope another month or two at least we should get back to the level where we were and to move forward from that. So I think in future, if anything like that, they want to bring down credit levels or something, they should give some time to the brokers to, like 1 month or something, within this period you should bring down or something, without enforcing like kind of overnight things. I don't think this was like overnight, but still that information was something like that, the market viewed it something like that, and that's what they have to sell down. And the earlier run also going up to 9,000, I think we needed a correction, and we should have had about 2 or 3 corrections on the way, but we never had, and so this was another good reason for people to take out profits, and that aggravated the problem. So otherwise, we should have managed well, within the days or week or something, there could have been a small corrections and kept going. By now. If that letter didn't come, maybe our market would have been at around at least 10 or 11,000 by now. So now we have lost all what we gained. Now we'll have to, as you said, almost ₹1 trillion is lost in the market, and I think now we'll have to get back slowly. We have to come to that levels again first before reaching going forward.
So if I ask you, like, what advice you would have given to stock market, the stock exchange, the regulators per se, in handling these types of sensitive matters in the future, what kind of protocols they should be taking?
Maybe they should consult the stakeholders in that, and have some discussions or give some, without writing official letters. When you see letters coming out from SEC, CSE, sometimes lots of people get worried and scared, like, even the market also, lots of letters sometimes are sent out for small details. It's a routine thing, but the investors and the stockbrokers, sometimes they read it differently. So they get scared when you see a letter. You do normal trades, but suddenly you see some kind of a letter coming. Instead of calling and finding out and trying to solve that problem, you send official letter, then it becomes, you have to reply officially. People might go to the lawyers to get a reply, and it becomes kind of a more serious thing. So I would advise is, if there is anything that they see it wrong, they should call them, whoever is at fault, or they feel like that, they should slowly give a small message and say, don't do this, or correct whatever, if something is going wrong, and give that first warning, instead of just writing straight away and letters to the people and writing. So that's what I would say. To do it more diplomatically is much better. Rather than waiting, you build up a case, you watch and you wait something to happen to the worst, and want to take the maximum punishment or the bigger letter, and putting the system down.
Okay, and also there are several decades of initiatives, Imtiaz, like this demutualization and short selling, and the delivery versus payments and derivatives, listing of government securities. So stock exchange and the regulators have been talking about these initiatives for decades, but these have not materialized as of yet, and we are again talking about these things. And if I may ask, like, how much as an investor you must have lost because of this lack of initiatives from the regulators, and especially from the stock exchange?
Yeah, you're right. Like, as you say, more than 10 years they've been talking on this. We were one of the first countries, we were like computerized and all that in the region. We were far ahead compared to all other one, India, Bangladesh, all other countries. But now we have gone back because we have not done the dematerialization, and other products have not come to the market. But I understand that more or less everything is now finalized. The SEC Act is before Parliament. It should get approved any time now. I saw some articles saying that from May, that the DVP is going to be taking place. So most of the things are in place, I feel, within a matter of 1 or 2 months. I think most of the things will be, now you see the e-products are taking place, which also was a good thing, like, after the COVID has, I think, brought forward a lot of things. So it's everything a click of a button. I think most of the things are now can take place. So that's the future. I think we have to embrace those things quickly and move forward. So I feel maybe within 1 or 2 months, I think most of these things will come. And especially if like dematerialization takes place, there'll be a lot of, and the foreigners can start looking at it again. I mean, that's a very positive for them. Especially like there will be a foreign exchange will come in with a collaboration with the CSC, and also the other brokers will get certain stakes, and this will be listed in the stock exchange also. So that's quite a positive. So it will be a game changer for the stock exchange once these things take place. So I'm positive, and I'm hoping without any further delay that this should take place soon.
Okay. As you correctly touched upon, Imtiaz, now this digitization in the Colombo Stock Exchange, that has maybe because of COVID, but whatever is said and done, the initiative has been a very positive thing to stock market. And also now with that, we have seen a lot of new set of investors coming into the market as well. And what are your views about the digitization process that is taking place at the moment?
Yeah, that's definitely they have to go in that direction. So we were a bit late, but I think we have got into that. And only thing that we have to give some kind of a training for the new investors who are coming. So what is happening is they're getting their online password straight away, and without much consultations or anything with the stockbrokers, they're also actively trading. So like when there's certain like panic happening when the market, you see the index slightly coming down, they hit the panic button and they go and sell. So those kinds of things, people have to be advised properly. There's a good and the bad side, like, with digitalization, like you try to do on your own, especially the newcomers without much experience in the market, they can do a lot of damage also by just bringing down the market. They get panic and they start selling. So there's no control. Sometimes we check with the brokers why the market's coming down, and most of the time they say no, we are not selling. It's maybe some of our online customers who are selling these shares. So they have that right, and sometimes they are making certain decisions which is not good for the market and it's not good for them. So I think they should view on a bit long-term investments and be a little more careful with that. Whatever the digitalization that they have got that freedom.
Yes, Imtiaz, actually as per the statistics now, the number of accounts opening because of online account opening facility, it has doubled from what it was in previously. And also we are seeing a lot of investors coming in from outside Colombo to stock market. But as you correctly said, this can be detrimental to the stock market more than it is advantageous as well if there is not enough awareness is taking place. Yeah. So in that way, what is your advice to stock market? Because digitization is not something we can stop now. So what steps they have to take to control this situation?
I think the SCC and CSC now they are going regional. I read, I think they're next 2-3 months they are going to places like Jaffna, Kandy, Kurnagal, Gaul. Like they are planning to have some workshops for these people. I think they should continue doing that, and more through the TV channels. I think also they should start coming and educating the people. So I think earlier school syllabus they had from O levels onwards, they had education about the stock market. I saw something where they're going to bring it from grade 6 onwards now within the next 2-3 years. So that's also another good thing. Early stage, the investors will have to be taught the right way how to come and invest in the stock market from. So that's one area. And maybe the stock brokers also will have to give the clients kind of a training how to handle these when you are given this facility. But yeah, sometimes you make mistakes, and some mistakes are quite costly. So if they don't understand, so they will have to learn the hard way and come back. So this has to happen, but at some point people will understand and get better.
Okay. So overall, for the betterment of stock market and the improvements, what kind of steps you expect as an investor from the regulators?
I think mostly it's now they are on the right track. I can see like lots of things are happening last few months. It's more education. I think people have to be more educated and teach them how the valuation is like thing, how the market is performing, what kind of good values are there. Now, if you take our regular people, like the savings are more into the fixed deposits. I understand about more than 2 trillion rupees is in the fixed deposits. And 1 year back, yeah, you used to get about 10 to 15% as a return, but those rates have come down to 4-5% now. So it's a high time that people have to be educated and they should have a passive income, and our cost of living is not going to go down. So people have to understand cost will never come down. You'll have to increase your income by additional income, like something like a stock market. You can have your normal salaries, or you're working, doing certain businesses, you can have that income. But this should be another way how to invest and to get in a bad time, like get some good returns. So your savings should be, I think, now focused into like something like a product like a stock market, because which is trading at a very good discount at the moment even. I would say like the market is trading around 13, 14 times the PE. But if you say the world markets, even around the region, like say India is trading around 32 times, Singapore is around 40 times, Malaysia is 25. So at the peak, I think in 2011, our market was around 29 times, almost close to 30 times our PE ratio, which has come down now at the moment. But with the earnings season coming in, I'm sure that's going to be quite a good earnings coming in. With that, our PE ratio can go down to even at current point to 10 to 11 times. So we should actually trade. We are a frontier market. At least to 18 to 20 times we can trade, good times. So I see at least another 100% gain is there. If you see our book to book value ratio in 2011, we were trading around 3 times. Currently we are around only 1.2, 1.3. So that means more than double. So our market cap is about 3.2, 3.3. So if that is like doubled, you're looking around more than 6-7 trillion our market cap should be with the existing companies. So that's why I see that valuation, and this information should be given to the people, not to sell good shares at bargain levels and hold for a longer period and enjoy the ride.
Imtiaz, you have gone public through your Twitter handle recently, and you have made a statement that you're predicting the all share price index to be at 11,000 or more by the end of the year 2021. Do you still stand by this statement? And also let us know what made you to predict this much of a bold prediction. What made you to do that?
Yeah, actually, end of October, I think, if I'm mistaken, when the market was around 6,000, I predicted that it will go to 10,000 or 11,000, I think, by end of 2021. But within 2 months, by end of January, we already reached 9,000. So almost 50% went up during that 2 months. But unfortunately, because of this famous letter came in, everything has come back down. But I still feel by December we have still time. We can reach that 10 to 11,000 mark again. But my hope is within me, I have a bigger target, looking at 12 to 15,000 even. And I have a goal of another within 2 to 3 years that we should go up to 30,000. That's all based on valuations. Currently, our companies are doing very well. Lots of companies have gone regional, and income is getting better and better. Interest rates are down, taxation is down. So there is more mergers happening, there's more buyouts happening. The companies are now making more business plans, and they are reinvesting their monies and expanding. So lots of things are taking place, and with all that, we're expecting more companies also to be listed in the stock market. According to the minister, Mr. Cabral, who's in charge of the stock market now, he said another 200 companies at least will come to the market. He was predicting about 500 companies to be listed within next another 4 years' time. So if those things to happen, it's going to be a very vibrant market. And all this, so far the market has gone up without the help of the foreign institutions coming in. When they come, that's going to be a bonus. And another factor that I look at it is the state funds has been away from the market for a while after the bad period that the investments they did in 2010-11. Still they have not come out of it. So like even Mr. Cabral says, our market should be around 4 billion, 4 trillion plus, and there's a lot of valuations. When he says that there is good valuations and asking the people to come and invest, I will tell the government also to, first the institutions should come and also show their confidence and come back to the market. They shouldn't feel shy about it because they had some few bad experience. Even those investments with whatever cost, by end of January they had written off all their losses. So it's still not a bad thing. But if they do the proper due diligence and if they really go through the proper good companies, they start investing, I'm sure they can make lots of money. And because of the interest rates have come down, their bond rates, they also have to answerable to the investors, the EPF holders, and they used to give about 10-12% returns. Now I don't think so they can give 4-5% by investing in the same debt market or in fixed deposits. So only way you can get higher returns is coming back to the stock market. So without getting more delayed and further questions asked from them later on, when the market is around 15,000, the question will be asked why they didn't come into the market and make bigger, higher returns. So there'll be another accusation later if they don't come. So I advise this is the time to get back into the market and also for them to this thing. So that's overall, taking all those bullish sentiments, I have made my assumption that this can go up to these levels that I have predicted. And it was not far away. We got almost there. By now we would have definitely passed that. So let's see going forward how it happens now.
So even in the current situation, you still stand by that and you expect it to be?
Yeah, so nothing changed from my original decision. So as we said, we're discussing the main reason for the market to come down was due to this letter coming out. It's not because of the companies like overvalued or profits are not coming or anything like that. The valuation still stands, it's getting better and better. So there's no reason for the market to stay at these levels. It's just that now we are facing the third wave of the COVID. So hopefully if we can control that, that's the only bottleneck I can see for the time being. And apart from that, we are looking at the port city bill coming up soon. Hopefully by next week, Thursday we are expecting the vote on that. I'm sure there's a lot of companies are lined up to come for investments, and there's another additional big bonus for the market and the country to go forward.
And Imtiaz, now in social media, we can see a lot of people are talking about the market, giving advice and giving technical analysis, and there are so many people and so many social media channels and pages giving advice on the stock market investing. And what is your view on that? Do we follow them or do we have to ignore them?
It's, in a way, it's good that a lot of people have got involved and they have learned the market now. They have gone up to the levels of technical analysis. Even I see it, I'm very surprised the way they are putting out they've done a lot of research, so they're doing a lot of hard work. So I think we should encourage, but only thing we have to be careful also with whom to believe. Certain Twitter handles you see, there are no proper names behind them. So if they come out with their name, then it's okay, because others they hide behind something else and they come and give advices, they're not accountable. So I feel people have to be a little more cautious. They have to understand. By now they should be able to see who are the genuine ones or the bad ones or whatever. You don't have to take everything that comes in that. You can go through, but you have to make your own also your analysis about those things and make your own decision. So it's good, let them give those details, but you digest that and then take it forward. But don't just believe everything that comes in the social media to be taken for granted.
Yes, so as you correctly touched upon, actually there's a generation of new investors and who are technically savvy, and they are coming into the market and they are not depending on the stockbroker advice or investment advisors advice, and they are doing their own analysis, and basically they are depending on the technical analysis. And with this situation, do you think this is a welcoming sign for the stock market, or can it be detrimental to the stock market? Or do you think that they are doing all these trades without proper knowledge or what is your view on that?
First thing, I think if the stock brokers, if they can give a better analysis, I don't see much of the stock brokers, spending money on the research. I would say about only 4-5 good companies are like, putting out research reports. We have about more than 25 stock brokers. Others are just, so some of these investors, they just speak to the brokers, and they also they just go by the swing, like, they just say if the market is going up, they say it's going up and buy. And it's coming down, they say no, better sell, is going down. So there's no proper way that they're advising. So that's why people have now got into at least whatever information is in the social media, they're depending on that. So the best thing is the stockbrokers will have to come up with a better research teams and technical analysis or whatever, and advise their customers, and they can put it even in the social media, those things. Then let the others also give their own opinion, so you don't have to 100% depend on that. So I won't say it's a detrimental. I think the future is going to be the social media. Whatever happens, the slightest thing will be brought out in the social media. So the good and the bad, it's going to be there. We'll have to embrace that, and we have to try to live with that. So there will be a lot of people will be condemning certain things. They'll condemn stockbrokers, the stock exchange, the SEC. So we'll have to learn to take it in the right spirit and learn from those mistakes and move on.
Okay, so what do you really follow? Technical analysis, fundamental analysis, the broker house research reports, or your own analysis? What is your...
I read everything. I'm not a very technically correct guy. I'm not a technician to read these things, but I'm slowly learning. But more on fundamentals, and I do a lot of research on my own. I do a lot of reading from the CSE website to from newspapers to the social media, and especially from the foreign markets and like top investors in the stock markets in other countries. So I look at how they have performed, how they look at it, how they value companies. So those informations I take in and I put into practice. So there's a lot of research done. It's just not that I just jump in. At a time, I will have only about 10 or 15 shares that I'll be trading, and most of those are long term, which I bought like 7-8 years back, and I will trade only for about 10 or 15% maximum. I'll wait until my target prices are reached slowly, like been patiently waiting for like 7-8 years, and once I go into a certain company, I'll go into depth and understand what is the business model, how is the management, how is the dividend payout, lots of information, financials, whether the interest rates are going up or whether they are on the right track and expanding. So lots of information to go on in. So once I'm satisfied about a management and a company, I just believe the company and just stay with that. So for me that has worked. And now in my accounting principles also now, every yearly you have to take the mark to market. So you don't have to 100% realize your profits even. In my financials, that will anyway reflect. So those profits will be, some are realized profits, some will be unrealized. But anyway, that is taken into your books. So I don't have to really keep trading to just realize that profits. If I feel I have to wait longer, I'll continue to hold on. So that's how I trade, and I'll advise even others to take a long-term view and get the maximum these things. So sometimes some people buy and they see a 10-20% returns. They want to quickly come out of that. But you will see that the good company will keep growing. Sometimes you will see 200-300% that company can go up. For example, like one company was just trading around 180 last year. Now it went up to 50-60 rupees. So it was like over 2,500%. So but if you had thought like you are bought at 180 and 250 is a good profit, you would have come out of it, but you would have never realized the maximum on that. So that's how you have to understand and believe in a company and then stay for a longer term.
Thank you for watching Market Insight, and we are hoping to see you again soon with another exciting discussion.